Gary Wagner with our Forex Gold forecast. It is the weekend now, Friday, February the 5th, and this is our weekend summary and update. Gold closed today at 1134.78. Forex Gold having a low at 1127.30, a high of 1134.78, and it opened at 1132.50. So we had a quiet close to the open. It's forming a small bodied candle, almost a bullish harami. We would look to see for confirmation to give you a little bit of an idea of what we saw this week and our current position. First of all, we are currently long right here at 1117.98. The pattern that got us long was as followed. We saw this downtrend 3 days in a row. We had these two small bodied candles. We were able to witness almost a tweezer bottom. The lows were quite close. And on the following day after this white candle, we had a gap up and a nice rise over. These two candles here form what we call a piercing line. Now, I wanted to see a nice confirmation of that, and the following day we did get a white candle, but it was a doji-like candle, but we entered the trade on the close of Friday last week. Well, lo and behold, we had some very interesting fundamental news come into the marketplace, and at the beginning of the week, on Tuesday, it was announced in Business Week that George Soros happened to be a large buyer of gold. In fact, he increased his gold holdings by 156%, and that was back in the last quarter, meaning in December and the last quarter of 2009. Well, that really moved the market, and we saw that move the market on a tremendous rise. So we saw it move from about the 117 area to a very, very nice high, just around where we closed today, 134, 132 in that area. We had a little bit of breathing on Friday, Thursday, and Wednesday. We had some follow through, but we're looking at some points of resistance. Obviously, we're in a long position. We're bullish. Our stop is currently trading at 1112. After looking and reviewing, I'll look to move it up towards the beginning of the week, but because we get such erratic swings in gold, I do want to keep that stop a little bit on the loose side. It needs to make sense, and so we need to put it below this body right in here. Otherwise, it just doesn't make sense to us. Right at 140, 141, you notice that we had a couple of times where we tested that area, but we were unable to close above it. That has become resistance for us. There's no question about that. The next resistance point is going to be based just a little bit higher at about 1145, and I'm basing it off of these tops here. And then, of course, we have another critical area of resistance based on that top here, and that's coming in at around 1160. These are the different areas that I'm looking to see whether or not it can test, trade, and close above over next week's trading. We're still following our upward channel very, very nicely, and our stochastic indicator is well in the range where it is not overbought, with our percent D at 17.57 and our fast percent K at 29.06. So it's moving up nicely. It's not expanding too quickly, and it is not moving into overbought territory. In terms of some of the other technical indicators that we're looking at, the moving average convergence divergence right now is still trading very, very nicely in terms of the fact that it is not overbought. 7.04 and 3.14. So I like that. Also, if we look at our simple moving averages are well below. We've had this nice cross of the moving averages, which actually occurred right before the signal was given. So that's also giving us further confluence or indication that the bull trend that we are currently witnessing does have some good potential. to continue. Our overall view of the market right now is we still have to have predominantly bullish sentiment. If you look at the last two trades that we recommended, we had a long which was issued here. That was based on this doji, inverted hammer, and then the following candle, which was a belt hold line. We then entered the market on the following day at 1079, which was right in here. We did see the market move up higher, but we got stopped out, as a matter of fact, on these series of lows here. Our stop was at 1100, so we still picked up $21 on the trade. But we did miss out because we re-entered the market here on this long position at 111798. So the last two long trades, the first one we did pull out with a profit. This one we have our stop. We'll have to wait to see what happens. But if we look at the overall activity since that doji did prove to be the absolute bottom of the market, and that's what we were talking about, Ben, back when we first saw it. I like the trade we're in. I like the long side of the market from this point. We'll see what happens next week. This has been Gary Wagner for WFGForex.com, and as always, traders, good trading to you. Bye-bye.